Welcome traders to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our wave counts. Today we're starting the weekly analysis with the euro, which has been moving pretty sideways on the daily chart. We have been working with the main plan of having the euro building some sort of corrective leg here to reach the low, reject, and from here start the wave 3. However, last week we got a different scenario where the price built here the impulse. So this is confirmed. This was a running flat, A, B, and C, where C finished before hitting the wave A. So name of the pattern, running flat. Now, we are going to start finding the end of wave 1 to complete our pattern, and then we are going to look for the ABC formation for the second leg, and after that, the main plan is having the rejection, the validation for the end of the wave 2. So that's a question that I often receive from my clients who are starting in the Elliott Wave world is how to find the end of the wave. And it's a great question, and of course that's going to be the trade once it's ready. But traders, before we talk about those details, there is a problem usually when the beginner is applying the Elliott Wave theory. Let's suppose that this is a wave 1 and the live market, let's say, is here, and the beginner wants to find the end of the second wave. Because he believes that this is the wave 1 and the wave 2 is in progress, he's going to do anything that he can to buy it. So he's going to make a lot of mistakes, adding Fibonacci levels, that I believe is a huge mistake, using the Fibonacci levels to find the end of the wave. And on the lower time frame, the price hits 61.8 or whatever and adds a hammer, and the trader goes long because he's thinking that is the end of the second wave, and the price continues to another level, so he continue adding or doing crazy things, and at the end, the price moves under the low, and it was a big loss for the trader. That's a huge mistake. The right way to apply it and to find the end of the wave is actually pretty easy. After the wave 1, after any impulse, you look for A, B, and C. And once you have the ABC in front of you, you look for a candle to close above A. Don't forget that this is A, this is B, and this is C. And when a candle closes above A, that's the entry point. So forget about Fibonacci levels. This shape can happen like that, can happen smaller here, the ABC, or it can happen bigger here, right? So we don't care the size, the deepness of the pattern. So we just focus on finding the ABC. If it happens here, great. If it happens smaller here, great. If it's going to be bigger here, great. You see, that's the point. We look for the ABC, and the B wave needs to be significant, needs to be big enough. Because what if, on the other hand, the price sell-offs and continues lower, and never the B wave showed up? So the beginner will be buying and buying and buying because we use the second wave, and that's a huge mistake. On the hourly chart, I have another example. On the live market, I believe that learning on the live markets is key to accelerate the career. When you learn only with past examples, when you try to apply these on the live markets, it's going to be harder. This is called active learning, and that's the approach that we apply on Elliott Wave Street. Today is holiday in the US, so be extra careful with any scalps or day trades. Anyway, if this is A, if this is B, and this is C, so the question Actually, let me fix here so we can see the waves. There we go. So the question is actually how we can find the end of the wave 4. The beginner will start buying because the price is selling off. Imagine the price here selling off and selling off and selling off. Imagine someone buying because there is a divergence on the 5-minute chart, or because there is a hammer on the 61.8 or the 50%. That's crazy, right? But instead of doing this type of approach, that doesn't work because you are going against the momentum. Wait for the rejection. And there we have our trade. This is a setup. This is a valid bullish setup. The target on this trade is at the previous high. Any stop is here, so the entry point is here, and the risk and the reward. That's a setup. That's a trade. That's a good validation for the end of 4. Even with a good validation, there is still the risk of losing. So we leave a protective stop loss of 1% of the account or less. And we book partial profits when the trade starts working in our favor, in our direction. Also, as traders, we need to buy at the lows. So this is a low here as well. Let me clear my drawings. This is a low here. We're not going to buy here on the other side. We need to buy on the low side of the trend. Imagine a center line here, and we can say expensive and cheap, expensive and cheap. Once we have the completion of this top, of this distribution process, I'm looking for something like this, we're going to start a deeper corrective wave, the wave that I was showing on the daily chart. If you want to learn more about supply, demand, and these institutional cycles techniques inside the membership on Elliott Wave Street, you can learn more about these topics. This is the dollar yen. On the dollar yen, I'm finding the end of the second wave. So should I sell it now? Because I'm seeing a double top here. Should I sell it before? Well, let's talk about the market structure. Look at this low. Look at this higher low. Look at this one, higher low. Right? So the trend is up. Look at this one, is higher, and look at this one is higher. So why in this world I'm gonna sell it if the trend is going up? Doesn't have any sense. Let's have a look at the other side. High, higher high, higher high, higher high. So in order to start switching the trend, we need to have something I call the change of behavior. Let's suppose that happens here. And for the first time, we have a lower low instead of a higher low. You see the transition here? That will be the first step. The second step is during the test, seeing the ABC and the rejection, because that will complete the pattern. So we were seeing higher highs, and now we're seeing lower highs. See the transition on the upper side? So we are seeing the transition on the lower side, on the upper side of the trend as well, and this is a structural analysis of the trend. So right here, we can sell it with a high probability that the wave 3 is coming if we have the sellers at lower prices, because this is a common mistake. Sometimes the traders start seeing the change of behavior of the market and they get excited and they sell it here at the worst price possible with a stop loss here, and the price reacts with a green candle or several green candles coming up to the previous high and taking out the stops because they are not waiting for the test of supply. Huge mistake. But if we wait for that test and it successfully proves that there are sellers at lower prices, we can take the trade there. And we are using the Elliott Wave theory along with the supply-demand techniques and market structure. Let's have a look at the S&P. The S&P has been fantastic, has been one of our best trades of the year. I'm thinking that this is just the beginning of the trend. Last week, we were able to cross a key area right here. And it seems like the price is going to continue into that direction. So the plan is having price breaking this previous high, the 600 area, and of course it's going to have eventually a retrace, but probably not this week. Probably this week is going to continue higher. So the thing is that we are seeing the change of the trend here as well, right? Look at this turnaround, look at this turnaround, but we started to buy before, so we have an edge. This was a beautiful setup. I'm getting ready a video for you this week showing how we did it. But now let's talk about the live markets. So we can go to lower time frames. The only thing we can do is buy in the S&P. We can't sell it. That's crazy. And here in lower time frames, we start developing the strategy. Look, there is the validation candle. Right there we have our first signal that the S&P is giving the reversal. Right there, the candle closing above A is a first signal to buy it and target the previous high. Today is holiday, so futures market are going to close at 1 p.m. But we can get that idea into the once the market opens again, and we can get back here to the previous high as the target, right? 1, 2, 3, 4, 5 sequence to push the price higher and have that beautiful trade happening. Traders, if you want to learn more about these strategies, we have a fantastic membership in ElliottWaveStreet.com where you can watch the daily analysis Monday through Friday on all these markets. Pick your plan, start your trial, plus the charts, plus the trading plans, plus access to educational resources, the Elliott Wave Crash Course, the MACD course, the Volume Profile course, and every day is a new adventure in the markets with key price action techniques to find the end of the waves. Is the best way to accelerate your Elliott Wave career, the Elliott Wave Street membership. So I'll see you at the other side. Sign up. You will get immediate access. You will get immediate access to the platform where you are going to be able to watch all the previous analysis and the educational videos, and of course start getting every day the fresh market analysis. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.